Good evening, class. This is Pips Player FX. So, today the topic we'll be talking on is 3 stages of price delivery. Now, what are the 3 stages of price delivery? The 3 stages of price delivery simply means what? The AMD. Like I said, it means what? AMD. What is AMD? AMD simply means accumulation. The A stands for what? Accumulation. The M stands for what? Manipulation. And the D stands for distribution. Sorry. Now, what am I trying to explain here? We have basically 3 stages of what? Price delivery. These are the 3 stages of what market will pass through before distributing. It's a must. Market will always what? Take out these 3 rules. Market will always what? Accumulate, manipulate before distribute. Now let me show you example of AMD on the charts. Now let me show you example of AMD on the charts. Now this can be an accumulation. You can see this is accumulation. Then what happened? Manipulation. Tricking people that what market is going to the what? Upside. Then what happens after manipulation? It will be a what? Distribution. Now, as you can see from the diagram above, this is a what? Clear structure of what? This is a very, very clear structure of what? AMD, which stands for what? Accumulation, manipulation, and what? Distribution. So this is it. Very, very simple. Let me draw it again so you understand what I'm saying. Accumulation goes like this. Market will be accumulating just like what? Consolidation. Then what happens if it should go to the upside? If market is trying to be bullish, it will always what? Manipulate to the downside before going up. This is what? Accumulation. This area here is what? Accumulation area. This area here is the manipulation area. This is the manipulation area. Why this area is what? Distribution area. So these are the 3 stages of what? Price delivery. It happens every day on the chart. As you can see, we can call this area to be what? Accumulation. We can call this area to be what? Manipulation. We can call this area to be what? Distribution. This is a perfect example of what? AMD. You can see it on the chart. It happened here. Market distribute to the downside, but giving us a first bullish move before what? Falling. Now, what am I trying to explain? I'm trying to explain that what? Market always moves with what? 3 stages of price delivery. This is the SMC concept. This is how banks operate. Now, if you should apply it to your daily life, for example, you always accumulate things in terms of knowledge, experience. You accumulate different types of what? Experience about life. Then you trying to pursue your dreams, for example. Now life will manipulate you. You will see different challenges and all that. Then along the line, if you manage to succeed, you start you'll be on the distribution phase. That is what? Soft life and the enjoyment, or whatever you call it. So this also applies to the market. It happens with accumulation. This is where the banks, the retail traders, the hedge funds, this is where they take their trades, they take their entries. So these are orders being formed. Now, just like market is trying to take a decision, either to come to the downside or to come to the what? Upside. And what will happen after accumulation? And for something to accumulate, it simply means to what? To gather something, to what? Join something together, to accumulate. Now, in process of accumulation, what will happen after the manipulation is always caused by the what? Hedge funds, the large banks. Once market is what? Accumulating. Once market is accumulating, you see the traders that are worth billions of dollars. They will try to what? Sell or buy in order to what? Get quick profit and get out of the market. Now they believe that traders have what? Accumulated their money in this place. Now what will happen if the hedge funds and the large traders should sell Remember, it works with demand and supply. The higher the demand, the higher the product will likely skyrocket. For example, if there is a demand for a particular product or goods, the price is always what go up. But if there is a larger supply compared to the demand, the price will fall down. Now, this is the same thing. If the supply deals with what the selling, while the demand deals with what buying. Now, if the larger traders should sell, remember, these are smart money traders. They don't trade like us. You understand? They trade in billions of dollars, and that will shake the market. Now, if they should sell within, for example, 2 minutes and exit the trade, you see that what manipulation will happen. Immediately, the market falls to the what false side. They will withdraw their profits immediately before market reverses to the main trend. So that's why we are not advised to trade on the accumulations phase. You wait for a manipulation before you take your entry. Follow the distribution. We'll be explaining about that later, but I just want to brief you on what power of what AMD. This is how AMD works. Now, let's head back to the PDF. Now, you understand diagram of what AMD now. So you can see, so the power of 3 applies to all time frames due to the what fractal nature of price for a bullish daily candle. So smart money builds long positions around the opening price, slightly above and below it. Now, what is this trying to say? This is the open price of the candle. This is the week high. This is the closing price. Sorry, opening price from here. The closing price at this area. If you know, if you've read your candlestick trading Bible, you're supposed to know where candle is opening and closing. So this is it. This applies to this. You can see this is the higher time frame candle. If this candle should be a 1 hour candle, remember, if you should go to 5 minutes candle, this candle can give you up to 6 candles, because we have about 5 minutes in 1 hour. 5 plus 5 gives you 10. 5 plus 5 gives you 10. Because we have about 6. Understand? If not, I think it should be up to 12. Sorry. We have about 12 candles if you should go to the 5 minute time frame. That is for a 1 hour candle. Then if you should go to the 15 minutes time frame, we'll be having about 4. If you should go to the 30 minutes time frame, this one candle will stand as 2. So this is just it. I'm trying to break it down in case of a smaller time frame. So if you should zoom this candle, if you see any thick candle like this on the chart, it has to do with what? Accumulation. Smart money is building what? Long positions. That's why you see candle gather in form of a what? Ranging market. This is the accumulation. Market is what? Taking more orders. It's gathering in one place in form of what? Consolidation. If market is consolidating, automatically is what? Accumulating. Now, the first move is the what? Manipulation. If market is going up, for example, if the market is bullish, it will give you a false bearish move before pushing up. If the market is bearish, it will give you a false bullish move before pushing down, trying to grab liquidity to fuel the move. Now, let's go to the manipulation phase. You can see after the accumulation here, you can see what happened. This was the first move, taking out what? The swing low. You can see the swing low at this area. Market gave us a first move at this area. This was a what? Grab of liquidity. That is when what? Smart money then places their buy orders below the opening price. Now, if this candle should be a 15 minutes candle, after sweeping the previous low, you can see market was what? Accumulating first of all. Now, this red area, this area I painted red, was the what? Manipulation area. Now, watch this chart again. You saw what happened here. There was no manipulation here. Market was what? Ranging from here to here, from here to here. Nothing happened. Now, after that, you saw what happened here. Market fell down to the downside. Meanwhile, this market is trying to go up, but it gave a false move to the downside, sweeping people's stop loss at this area, giving them false move. Many people will try to buy at this area, and their stop loss will be below here. Now, market will take out their stop loss, through what? Manipulation. So to anticipate a bullish range expansion, look for a manipulation lower to occur prior to the what? Distribution higher. Now, what is this trying to say? If you want to look for a bullish range expansion, for example, let's say you are looking for a buy, you want look for a manipulation to go lower. That is what happened. You look for a manipulation to go lower and get rejected in form of a what? Liquidity sweep to distribute what? Higher. So liquidity serves as fuel for the market. Now it's trying to what? Take in more energy. That is the manipulation phase. So this involves a sharp move opposite of the what? Intended direction. Remember, first move is the manipulation. So this involves a what? Sharp move opposite of the what? Intended direction, inducing shorts into the what? Market and trapping early longs. The longs are the people that are going to buy, people that went for buy earlier before what? Sending price higher. Now this will always what? Haunt your stop loss. Like I said, this was the initial accumulation phase. Market has not manipulated. Now, this was the manipulation, taking out the what? Early buyers. That's why you don't rush in market. You have to be patient. Now, if you enter early, you'll be stopped out. Once there is a closure of the what? Manipulation here, then you can enter for a buy. Then your stop loss below here. That's when smart money takes trade. If you're an SMC trader. Now, this is the distribution phase. Now, look at it very clearly. Now, we have the accumulation at this side. This was the accumulation. This very candle, this black candle did the manipulation, taking out early buyers. And what happened? Market starts selling, starts buying, sorry. Remember, if the trend is bullish, it will always fall to the downside, taking out the early buyers to serve as what? Liquidity to the market. These people SL will be at this area. Now, market will take out their SL before going up. If it should go down, it will also take out the early sellers. People that are trying to sell, you take them out at this area, giving them hitting their stop loss before distributing to the downside. This is a very, very simple concept. So this is the entry and what? Application. With power of 3, which is the accumulation, manipulation, and distribution, you are looking to observe what? Manipulation and what? Position yourself to what? Capitalize on the what? Distribution. You have to focus on mainly on the what? Distribution phase. You have no business with the manipulation aspect. The only thing you can do at the manipulation is what? Once the manipulation is over, you enter for your trade. Your stop loss should be below the manipulation wick or any other block as at that area. We'll soon be explaining about other block on our next class. So this way, you effectively what? Buy low and sell high, just like smart money. You understand this phase, huh? Now it's very simple. AMD is very simple. Deals with what? Patience. You have to be what? Patience. You have to be patient while trading what? AMD. Accumulation, manipulation, and distribution. Market will always accumulate. It will manipulate. It will what? Distribute. Now, let's zoom to the chart. If I can see any clearer example. Let's see if I can see any clearer example. I explained one earlier where I talked about this. Now, let me show you this. Now, this is a clear example of AMD. Sorry, from here should be the what? Accumulation. From here should be the accumulation. Now, let's say market is trying to what? Push down. Like I said, it will give you a false move to the upside, taking out liquidity. Now, this area is the what? Manipulation. I'll paint it red. That area is the manipulation, because what happened here? Market has the intention of falling down. It took out the early what? Sellers. Now, let's say people are selling from here. Let's say people are selling from here, and their stop loss is placed at this area, for example. Let's say they are targeting a 1 risk to 14, for example. They are targeting a high profit this thing. Now, if you should enter earlier, you will see the market will reverse, take you out. You see where price took people out? Here, hitting their stop losses. Then what happened before what? Distribution. So you have to be patient while trading the financial markets. This is the accumulation phase. You wait for what? Manipulation to always occur. If something like this happens, you roll out your highs and low. You wait for a manipulation and a closure inside the accumulation phase. This is the distribution, the manipulation. This is the manipulation. This area above here is the manipulation. Then what happened next? Market was distributed. I'll paint that green. So this is the 3 stages of price delivery. Accumulation here, trying to get the redirection. The first false move and a closure below is your what? Manipulation. Immediately you can enter for a sell at this area. Once you see your manipulation, immediately what? You enter for a sell. Your stop loss above the manipulation area, hitting a what? 1:14 reward. You will hit TP on this trade. There are rules guiding all this, but first of all, I would like you to understand the 3 stages of price delivery. Now, on our next class, we'll be talking about order blocks. We'll be talking about order blocks on our next class. So you have to understand A and D first of all: accumulation, manipulation, and distribution. So in our next class, we'll be talking about order blocks and other entry models. So bye for now.